Let's review the key definitions for Unit 3.2 on sources of finance. You may need to watch this one a couple of times. What is startup capital? Startup capital is the money an entrepreneur needs to launch a new business from scratch. Think of it as the kickoff fund. What is working capital? Working capital is the cash a business uses for daily stuff like buying materials, paying bills, and covering short-term costs. What is internal finance? Internal finance is money the business gets from inside sources, like selling its own assets or using past profits. What is external finance? External finance is cash a business raises from outside sources, like loans, leases, or selling shares. What is liquidity? Liquidity is a business's ability to pay off its short-term debts. Basically, how easily it can access cash when it needs to. What is retained profit? Retained profit is the leftover money after all expenses and dividends are paid, which the business keeps for future use. What is an overdraft? An overdraft is when a bank lets a business spend more than it has in its account, up to a certain limit. What is debt factoring? Debt factoring is when a business sells its unpaid customer invoices to another company to get quick cash. What is hire purchase? Hire purchase is when a business buys something by paying in chunks over time, and owns it after the final payment. What is leasing? Leasing is when a business pays to use something, like equipment, without owning it, kind of like renting long-term. What is equity finance? Equity finance is money a business raises by selling shares, which gives investors partial ownership. What is a loan? A loan is borrowed money that has to be paid back over time with interest, like a business version of a student loan. What are debentures? Debentures are long-term loans businesses raise by selling bonds, and they promise to pay interest, but no assets are used as collateral. What is a rights issue? A rights issue gives existing shareholders the chance to buy more shares at a discount, like an exclusive stock sale. What is venture capital? Venture capital is money invested in risky new businesses, usually in exchange for a share of ownership. What is a business angel? A business angel is a private investor who puts money into a new business early on, hoping for big returns later. What are subsidies? Subsidies are government handouts that help keep prices low or support certain industries, kind of like financial boosts. What is microfinance? Microfinance is when small loans and banking services are offered to individuals or tiny businesses, often in developing countries.